This is the briefing for Friday, March 25th. Well, the chop continues. As you've seen from today's trading, the stock indices continued in a rotational pattern, breaking out on Wednesday of this week, retracing the breakout point on Thursday, and then of course breaking out slightly again on Friday with a surge in price going into the close today, which was very interesting in the S&Ps. This is the spiders. The Qs not so much, had a little bit of a surge. You can see they barely broke out on Wednesday also, but really just not a whole lot going on. This is just a lot of chop, and I have to tell you that when I work with people in the markets, I tell them all the time to avoid chop and wait for breakouts. Well, I've had my own troubles this week trying to trade the chop as well, thinking that this was a breakout. In fact, I thought that we were going to see a breakout in today's trading, and then of course we got this rotation back down for the remainder of the day until going into the close, when of course they stepped in and started buying going into the close. So that basically tells us that this is a market that is still unsure of where value is, as to whether it's going to be higher or whether it's going to be lower. So we really have to settle in, and basically what's happening here is we got one time frame of rotation through here, and now we're developing a second time frame of rotation right at the upper extreme of this area of rotation as well. A lot of times, and I covered this in last night's briefing, that's typical because traders know where support and resistance are. And when you reach an area of support or resistance, they step back to see if there's enough interest in driving price higher beyond that, in this case, this resistance level. And if there are, then they'll step in and they'll start to buy. A lot of times you get a breakout and a retracement and then a move. But that's not the case this time. We got a breakout, a retest, and we really just have not really moved yet, although it appears in the spiders today, the high from Wednesday was almost tested and taken out in today's trading, not so much in the NASDAQ. So we really have a chart pattern here, or a market that is unsure of where value is. There's just not enough volume to drive this market impulsively to the upside, and I covered that in last night's briefing as well. Looking at where we are in terms of the spiders, that once again, this is the three-step counter trend rotation. This 445, 446 area was where this leg would have equaled this leg, and it's beyond that. So you can see the rotational pattern that has occurred through here, breaking out now, and we've got this slow rise higher in the spiders. But even as this move has taken place, the divergence in market breadth is really becoming pretty significant. I mean, even in today's trading, as we almost took out yesterday's high, I think this is yesterday's high, or maybe it was earlier today. That was earlier today. We did take out yesterday's high right at the open, but you can see that breadth was even diverging even more going into the close of today's trading. So this is not a market that is strengthening. In fact, it's a market that is weakening, and that is mostly the reason why they're having trouble driving price even higher and testing this 460 level. Now that can change, and a lot of times the market will have a news event or something that will occur that will change the perception of value, and the internals will correct to support price. The higher percentage of the time is price is going to correct to the internals. So unless we get some type of really good news that suggests that the perception of value is going to be changed and we see volume increase, I think the risk is to the upside. And really, you probably should use caution on your long positions. Looking at the NASDAQ, you can see that it's basically the same thing. We've got an area of rotation right around this upper extreme, right around the 351, 352 area, really not able to push much higher out of that. NASDAQ breadth, the divergence is still becoming exacerbated. So this is not a market that is strengthening. It is a market that is weakening internally. And in the Russell, you can see Russell hasn't even tested its upper extreme right around the 209 area, really in a longer term area of pause or rotation. This is really pretty significant, going all the way back to the beginning of the year in terms of the Russell's rotation. So as we look also at the overbought and oversold condition of the market, we're neither overbought nor oversold. We are basically neutral. Not so much in the NASDAQ. NASDAQ's looking like it's getting a little tired, and it is approaching an oversold condition. What is more important here, this is net volume on the NYSE, and you can see that net volume is decreasing. Now, keep in mind, we're in a rally, a short-term rally, but net volume is becoming less and less positive. In fact, it is getting ready to go negative. The same thing with the NASDAQ. NASDAQ volume is negative right now. I should say not volume, but net volume, which is up volume minus down volume. So you can see that the internals are really not suggesting that this rally is strong and strengthening. In fact, it's just the opposite. This rally is weak and weakening. Based on that, we have to be prepared for some type of additional move back to the downside. Important when that will be to remember what happens when we reach important support areas. This is a daily chart of the spiders. Support's coming in right around the 430 level. In the Qs, support is going to come in right around the 350, 349, 350 level, and then below that is 340. And in the Russell, support, or I should say the IWM, support is going to come in right around the 188 level, and this rotation down lower. So basically, going all the way back to where we are in terms of the market internals, volume, net volume is declining, total volume is declining, and market breadth is declining. And for me, that has to change before I become a proponent of the continuation of this rally. And I think I showed that in last night's briefing as well, is that if you go back, this is the, let me get the spiders up here. So you can see the spiders here, and if you look here, you can see this is the January 24th low, and then we rallied off of that. But look what happened with volume. Volume absolutely collapsed, and this is what that led to. We have the same thing that's happening here, although I believe this is more exacerbated because volume is even lower now. If you can see here, this was 60 million shares, and this was right around 80 million shares. So this is even less volume than this was that led to this move to the downside. That suggests, along with market breadth, that the risk really is to the upside, and that we should see some type of move back to the downside, unless or until the market internals change. And that can happen. It's a low percentage of the time, but until that happens, this rally is very, very suspect. Have a great weekend, and we'll pick this back up on Monday.